Have you noticed the housing market warming up now that the holidays have passed and interest rates have dropped over 1% in the past 2 months? Well, then stick around because I'm going to be giving you the rundown during this February 2023 Tri Cities housing market update. Hey everyone, it's Connor MacDougall. If you're new to the channel, please subscribe and hit that bell down below for notifications so you get notified when I release new content and material about living in Tri-Cities, Washington. And as always, if you're looking to buy or sell a house, please feel free to reach out to me via the contact info in that description below. I'm always happy to answer questions and help people in their search or just finding out what Tri-Cities is about. So you may notice a change. I've structured the format in the report a little bit differently. I'm going to be tweaking it and playing with it moving forward just to figure out kind of what the best way to present the information is. If you have any suggestions, questions, or feedback about it, please reach out. I'm always happy to incorporate feedback and make it better for people if I can. So one of the things I want to talk a little bit about before we get into the material itself is with those interest rates dropping, recently we've kind of seen the last 2 months interest rates have steadily been trending down regardless of the fact that the Fed is still raising the base rate. So what we're seeing is sellers, particularly new construction, are willing to make a lot more concessions with the market slowing down right now. So when you combine those concessions with the interest rates dropping, now is kind of a great time, especially for first-time home buyers, to get into the market because it hasn't quite picked up and gotten really competitive again yet. And the prices have come down from the highs we saw last summer, but interest rates are also coming down and we're seeing seller incentives being offered. So kind of that perfect storm of we're never going to get back to 2018 or 2019 prices, but it's looking a lot better than it did around kind of October, November. The other factor is, like I said, it hasn't gotten super busy yet. We're not in the heart of the selling season, but we've definitely seen a lot more activity, especially since New Year's. We kind of call, or at least I call, anywhere from Thanksgiving to New Year's the Bermuda Triangle of real estate, because once Thanksgiving hits, people are kind of focused on the holidays and their plans, seeing family, and buying a house or selling their house kind of isn't a huge priority for most people, at least. And then once we kind of hit New Year's and we get into the new year, weather starts getting better, people start kind of thinking about what they want to do for 2023 and their goals. We see a lot of people coming out of the woodwork to get back involved in the real estate market and either buy a house, sell a house, or both. So the first chart we're looking at here is the yearly average sales prices. And it's important to note that this isn't a 12-month running right now, it's just year to date. So as you can see, 2023, we've actually seen a decrease in yearly average sales price. This is normal because December through February or November through February statistically has the lowest sale prices of any time of the year. As I've talked about in previous videos, that can change year to year, but when you look at the average, there traditionally is a dip on both activity and sales price around those times. So what we're seeing right now doesn't necessarily indicate that the market is on a big downslide. Prices have been decreasing since around July or August, kind of on a steady downtrend. But I would expect that once we see a lot of buyer activity come out in the spring and a lot of houses come on the market, we're going to see that year-to-date average sales price climb at least to where it was last year, maybe a little bit below. One thing that's interesting to note is when you look at the last 2 years, the increase in average sales price in Tri-Cities has jumped $120,000 in 2 years. So people who are starting to look at buying a home 2-3 years ago and have just been kind of waiting, hoping the prices would fall, you're now kind of $120,000 higher in purchase price plus higher interest rates to deal with. So that's why you're seeing a lot of people talk about affordability. But just something to note, and the fact that sales price right now is kind of at around $450. It's down below what it was last year. So if you were looking for a deal, the market has corrected a little bit since last summer, and now may be a good time to jump in if you're looking for an entry point. There's no guarantee it'll go up in the spring and summer, but generally more activity brings competition, and we do see the sales prices rise. So this is kind of a pie chart looking at our sales over the last 6 months, just broken down by city. And then we've also got a separate little chart there for new construction only, broken down by city. So it's interesting when you look at this to look at in the last 6 months, only 15% of the sales that we've seen in Tri-Cities have been new construction homes. As I mentioned earlier, some builders are starting to feel the pressure of those higher interest rates and people not being able to afford as much as they used to, hence those incentives. So when you look at these numbers, that really hammers home the point that 58% of the homes that are currently on the market right now are new construction, and only 15% of the sales in the last 6 months were for new construction homes. So that tells you there's a lot of inventory right now in new construction, on spec homes, and if that's something that you're interested in, now could be the best time to strike for quite a while. I don't think we're going to see all of those fly off the shelves immediately once we start getting into the busy season in the spring and summer. But I do think that inventory is going to drop, and we have seen some builders actually slow down on their construction and how much they're building, which means that once those houses start moving, there may not be as many homes to replace them come summertime. These three charts should be familiar for those of you who have followed along on my previous market updates or received my email. It's just covering the inventory, the under contracts, and the sales over the past kind of 5 years. I have tweaked them a little bit for this format though, so please feel free to let me know if you notice the changes or if you like these charts the way they are now. One thing that's interesting is when you look at inventory, it had been historically low for the last couple of years, and those higher interest rates and that big run up in appreciation and sales price, it has kind of slowed the market down and actually allowed that inventory to climb up and recover. So you can see kind of the end of 2022, we're actually back to pre-COVID levels of inventory, which is something that honestly everybody needed. Houses selling that fast and that much competition is really stressful both on the buying and the selling side. And now that we got some more inventory, the days on market has risen. It allows people to take a step back and actually take the time to make these big decisions without being pressured and forced into it. When you look at the under contracts here, you'll see that around May in 2022, we started seeing those under contracts dip off. That's right around the time that those interest rate hikes had started to take effect in the mortgage market and people's 90-day rate locks were running out. And we were starting to feel the pressure of houses actually costing more as far as the monthly payment goes. Then when you look at the total sales, right around July is when you see the total sales start to dip. The reason that is because most times when you get a mortgage or financing, you put an offer on a house, and somewhere in like 6 to 8 weeks from the time that you put the offer in and you're under contract is when the house actually closes and is officially sold. So that 2-month lag from May until July is where you see that come into play and why it's a little bit of a shift there. And then as we look at those graphs, obviously both the under contracts and the solds dipped off quite a bit at the end of the year, and we saw them lower than they'd been in quite a long time just because the interest rates were a lot higher and purchase prices were a lot higher than we've seen. And then that's what allowed that inventory to climb up and get back to a healthy level. So I think overall it's a good thing for the market and a good thing whether you're on the buyer or the seller side. Here we can see the inventory for the construction and the resale markets. It's interesting to note that you look at Richland and West Richland, and there's pretty much an even split of new construction and resale. So a lot of new construction going on in those areas and relatively lower turnover rates, I would say. And then when you look at Pasco and Kennewick, there's obviously a lot more resale available and a lot less new construction comparatively. So if you're looking for new construction, there's going to be a lot more options for you in Richland, West Richland. Not to say there isn't other options in Pasco and Kennewick as well. There's also quite a few developments that don't have all of their lots and all of their available purchases listed on the MLS. So they may have one listing out for the whole development. So if you're looking at new construction or wanting to build or buy a spec home, reach out and I can give you some more details on kind of what different developments are out there and stuff that might not be showing up on the MLS or Zillow when you're searching. Here's a pie chart kind of looking at our current inventory and breaking it down by price points or listing price. And we tried to kind of structure this in a way that these are price points that people often shop in. Rather than just breaking it up by $50,000 or $100,000 increments, we tried to make it a little bit more applicable to people's budgets and the kind of our clients, what we often see when we're working with people. So interesting to see that between $300,000 and $500,000, that's over 25% of the inventory on the market right now. So 1 in 4 homes that we're selling or that's being sold is going to fall in that 300 to 500 range, and that's really where the majority of the market is, or the biggest kind of single price point. And interesting to note that when you get below 300,000, there's only 9% of homes on the market right now are priced below 300,000. So that could also include manufactured homes where you don't own the land; it's a land lease, but they're still included here. So that's interesting to know because those you're not actually purchasing property, you're just purchasing a manufactured home, and then you're still having to pay rent to the person who owns the land. But that kind of shows you like under 300,000 really used to be a starter home around here and something that you could get into as a stepping stone. And now for the most part, you're having to look up above 300,000 for stick-built homes, depending on how far away from town you're looking to go. I also broke down the current listing inventory just by zip code. Rather than doing city, I thought this would kind of demonstrate to people different areas of the cities and maybe help show kind of what's available on the market right now. Pasco, it's not very helpful because they only have the one zip code, so it just shows up as one big number there. But it is interesting to look at areas like kind of North Richland and Richland proper. I would say the majority of the number you see there actually comes from Richland itself. Once you get up into North Richland, the turnover rate is extremely low, and we see not very much inventory and houses come on the market there. So if that's an area you're looking in and really want to be in North Richland, when something comes on the market, you generally want to act fast because they don't come around very often. You also want to be prepared, so being pre-approved, kind of knowing what you're looking for and having seen some homes already will give you a better idea once something comes on the market, so you can make a decision sooner than later. It also shows when you see such a high number in South Richland, which is a relatively small geographic area or postal code there. Sorry, not postal code. Small zip code, my Canadian is showing. That kind of shows you that like how much new construction's actually going on in that kind of area, South Richland, and how much activity there is as far as turnover and people looking to move. So relatively small area, but obviously quite a large number for inventory, as there's a higher turnover rate in that neighborhood than there are in other ones. All right, folks, that's all for the February 2023 Tri-Cities housing market update. As always, if you found this information useful and you like the material, please subscribe to my channel and hit the bell for notifications below. And if you don't already receive this by email, there's a link in the description below as well to sign up to receive this by email on a monthly basis. That way you can kind of look through the charts yourselves. And sometimes I have some extra information and data in the email that I didn't include in the video. So yeah, as always, it's great having you guys, and I'll see y'all again next time.